So let's look at our syllabus. When you go to IFRS exam, you probably expect IFRSs, so the standards. But the thing is that our talk is going to start with conceptual framework. So that is not IFRS standard per se, so it does not have number, but it has the logics of all IFRSs. And that is important so that we would understand what the standards mean, and we would understand what to expect even if we do not know certain standards, like let's say standards on some leases. So we are going to discuss conceptual framework and see how important it is for the examiner. So please do not skip it. We are going to discuss the measurements that are going to be used, because sometimes we are going to use cost, so whatever we have paid, but sometimes we are going to use fair value. So guess what? Spoiler alert. If you give employee a loan, let's say at $10,000 for free, so they will have to return it to you, but they will not have to pay interest, then you will not recognize 10,000 as the loan issue. You will recognize a different amount. Strange, right? We are going to talk about regulatory framework a little bit, and we are going to talk about the concepts and principles. So, for example, why it is necessary to eliminate intragroup accounts and so on. But that will be more or less embedded in the standards as themselves. Then we are going to talk about tangible non-current assets. So those assets that we can touch, such as property, plant, equipment, such as investment property, such as inventory. We are going to talk about tangible non-current, which is property, plant, equipment and investment property, and tangible current assets such as inventory. We are going to talk about intangible non-current assets, and they're going to be tested heavily because companies now have lots of them. Like brand, like employees' expertise, we will need to know whether to recognize it or not. We are going to talk about impairment of assets. So how to reduce the value of assets, because this is not something that can benefit to our company. So for example, if you have a forklift and forklift crushed into the wall of the building, this means that forklift is going to bring you smaller benefits compared to originally expected. And the building most likely will also bring less benefits. We are going to talk about agriculture. So we are going to count pigs and see how pigs grow. We are going to talk about financial instruments. Yes, that is the hardest because quite often we cannot even imagine the instruments that are in question. Obviously we can imagine accounts receivable, accounts payable, but not many people can imagine, let's say, bonds. So we are going to talk about that. We are going to recognize them using different accounting types, techniques. So they're going to be amortized cost, fair value through other comprehensive income, fair value through profit and loss, and all that will have to be covered. And we are going to also talk about such tricky instruments as convertible debt. That is going to be overwhelming. Spoiler alert, not as overwhelming as in strategic business reporting, because as you can see, we do not have any word that would look like hedging. And hedging is an important part of financial instruments. So you are lucky for now, but you will have to study for that for your SBR exam. We are going to talk about leasing, IFRS 16, another hard standard of ours. So we are going to recognize right of use asset, which is a brand new type of asset that is going to be used only for this standard. So if you are going to lease a building for 2 years, you are going to recognize a portion of this building in your accounts. And that is interesting, that is funny. We are going to talk about provisions and events after the reporting period. So for example, what are we going to do if there was fire after the reporting period? Or what are we going to do if, let's say, there was a major legal suit? We are going to talk about taxation, so deferred tax. Spoiler alert, not the method that you would expect. So we're not going to use P&L basis, we're not going to calculate taxes using incomes and expenses. But guess what? Instead, we're going to use assets and liabilities. That is weird. That is how this is going to be different from the UK GAAP, but that is how it works in IFRS. We are going to talk about reporting, this financial, non-financial performance, the ratios and stuff. We are going to talk about revenue. Oh, and revenue is going to be recognized in a totally different way, not based on cash. But you are going to recognize revenue even if you do not have a paper signed by your customer. And there are going to be 5 steps that we are going to apply. Oh, and yes, we are going to talk about sustainability issue. That is a brand new topic that was introduced just recently. We are going to talk about government grants. So the money that is received from the government, and how to recognize that. We are going to talk about currencies and foreign currency transactions. We are going to analyze the report and talk about the limitations of doing that. And as always, not-for-profit organizations. Not so much though. And we have the whole part of the syllabus that relates to the preparation of financial statements. We are going to calculate goodwill, and we are going to make this whole process of taking 2 financial statements or 2 P&Ls and calculating that. And we are going to look at cash flow statement as well. So yes, we are going to prepare cash flows for a single entity, and we are going to look at that in our spreadsheets, because that would be important for us to understand how it is done, because that is how you're going to answer your questions in the exam. And finally, you have employability and technology skills. That is tested by default. So because the exam is computer-based exam, you are going to be tested on whether you can use computers or not. I hope you can. So that is how our syllabus is going to look like. And I will see you next. Bye!